Testing. I'm going to share the screen here. Let's see if I can do this. And this may work. Let's see here. All right, well, testing. JB here. Hope everybody's doing outstanding. Sunday evening, March 8th, 9:33. Really quick week ahead webinar. Just want to talk quick about the markets. Some names I'm looking at this week, maybe some of the trends. Go from there. Obviously, you could have taken last Sunday evening and put it into this Sunday evening. It probably would make more sense, right? Futures 2% to the downside, S&P, Nasdaq 2.3%. Oil is soaring, 109.54 right now, up 20%. And it's almost like the things that you could write a script for that would happen if there was some geopolitical event in Iran with some attacks in the U.S. could have been today. Instead, it's a week after. Fast forward, and it just kind of adds to what's been going on, the uncertainty, the disruption in the strait, and then all the repercussions, the explanations. So, if there was one word I would say explains tonight, it's the uncertainty. So, uh, yeah, until that uncertainty becomes a little more certain, I think markets will be a little bit on edge. So I don't know if that's going to be a little more clarity. Is going to take a press conference? I don't know, right? But for me, I'm here to trade. So me, I got to look at scenarios, find out positions I'll be looking at the open, and go from there. But the good thing is, and I've said this for last week. Last week I didn't do too many trades, not because I don't want to make trades, right? I'm sitting there. Of course, I want to make trades, but I'm here to find decent risk reward setups. So to sit there and try and chase puts just to do the puts, or chase positions because they're going, because you sit on your hands, you're trying to find opportunities. Just some of the positions I was looking at last week would have just blown up in my face, right? And JP Morgan's probably the best example until Friday. But if I was trying to look for hedges for downside, I'm looking at the financials. And the flip side, of course, could on BlackRock. But not here to cry over spilled milk. Hopefully there'll be new scenarios this week that'll pop up. I'm hoping to the call side, right? So to me, I do a lot of my trades are short term. So I'm looking for I should be on here. Yeah, I'm looking for more short term setups. Premiums are elevated. So as we get closer to Fridays, the premiums come out of the position. So it makes it a little easier to trade for some of the trades I'm in. So I'm either looking for way far out of the money calls to play for some bounces, or I'm going to sit on my hands till I find some opportunities towards the later week. And we'll see scenarios here. I talked about 655 being that spot on the SPY. We're at 6:59 here as I'm talking. Sometimes you want to see some kind of capitulation, right? I prefer to happen during market hours. I don't know if we're going to get it overnight, but some scenario where we get an open, a quick flush at the open reversal, that would be an ideal scenario. What I don't want to see is kind of like a flat open and then just a melt for the rest of the day. We've already had a decent sell-off last week, right? So at least Friday, I would say, was one of the more rough sessions, I guess, to call it what it is. Yeah, so that's that. So also being a short-term trader, you got the long-term, right? So if I thought that we were going to be headed towards a recession, probably best case not to be looking for later dated strikes on call positions, right? I still don't think we're in that scenario. To me, I think if that was the case, the market probably be a little more. I don't know how to put it. I know it's down 2%, and you look at FinTwit, it's like the world is, the sky is falling, and you take a look, it's like the SPY is not going to be anywhere near it was at the end of November. We hit under 655 on the SPY. I know it's painful to watch. I just always try to keep things in context, because if you think the sky is falling, then you miss the bounce opportunities. Because like how can the market bounce? I always think of all these different scenarios over the years that you trade, and the big ones to me. I remember that the fat finger trade. I don't know when that was, 2014, the flash crash, right? And I always bring that in the back of my head, because I remember that happening, and I always talk about it was an Apple puts, and Apple was like a couple splits ago, so it went from like 500 to 400, and I had like the 420 puts, and the market was so crazy I couldn't even get out of position enough to make a decent coin on it. But to me, the next day, I remember thinking, I'm going to be in puts for a while, because how can anyone have confidence in a market that fluctuates trillions? Well, I don't know how many billions of dollars now. Billions is normalized. Now it's trillions of dollars. How can anybody be comfortable trading in a market that might have a fat finger cause some billions of dollars come off market caps of all these companies? So I remember being in puts for a couple days, and I'm like, how can anybody have confidence? Because the market is about confidence. But there, here it was, market road shook it off, and no one really talks about it anymore. But it again, it goes to saying, it's like sometimes you just got to kind of tune out all the noise. I always talk about other people's money. Tomorrow at 3 o'clock in the afternoon, someone could say, "Okay, the world is ending. Uh, have a nice day," and the market would still be bots buying equities because it's other people's money, right? There's just programs that go and buy everyone's 401ks or pension funds. So you always got to keep that in the back of your head when things are selling off, and then all of a sudden there's a bounce. You're like, who's buying this bounce? Number one, it could be someone just obviously trying to buy a bounce, trying to buy the dip. And two, it's probably other people's money. There's always money. There's more money going to work than there is selling. So if you're thinking that kind of have that perspective, it kind of helps to not get taken into this world, this whole FUD that's being out there right now. I'm not saying not to buy puts. I'm not saying be cautious. I mean, we can 655 breaks on a SPY. We can be back down to 620. And I mean, I remember back, in April, I mean, how far did we go down? We were 580 or so to start the year. Next thing we're 520. I remember I think it was a bear flag I had, and I wasn't bear. I'm typically not bearish, right? I mean, bears pay. I mean, it only takes a couple days on the bear side to be very profitable if you time it right. But I remember 580, and then I didn't think we were going to get that break at 500. We got down to 480. So I'm hoping we're not in a scenario where that plays out. I'm optimistic. I would love to get back to an environment where I'm buying spec calls on names because I think the environment's good for that company or what have you. Hopefully this kind of comes to pass. I hate to dismiss all the geopolitical stuff going on and the loss of lives and military situations going on. But that's my perspective. All right, that's overall markets. Just quick on individual names. So to me, I mean, there's the obvious names, and sometimes I think the obvious names is like, how can you make money on a name that everybody's going to be in? But obviously, the defense names, right? The Lockheed Martins, the Northrop, the NOCs, the LMTs. Do I have it on here? Why don't I have it on here? But of my top five stock for 2020. Oh, here's the long term. So this is the SPY, right? So 655. So we get down to 655 and break. Then you got to start looking at. I think it's 620. I'll see if I can find the chart. I'll have it on the watch list tomorrow morning. Uh, and then other things to watch the yields, right? So don't want to see the 10-year start to go bonkers. I think it had the biggest upswing between Wednesday and Thursday that in the last 12 months. Don't want to see yields start to head higher because once that starts to go, now you're dealing with all the other things that have come out of the woodworks, right? We'll be talking about the U.S. debt and all that stuff, and you're already going to have it. I'm sure POTUS is going to do some press conference talking. He already talked on Friday. The defense spending, I mean, he's just going to go nuts, I'm sure, trillions and trillions of dollars, which brings me to L3 Harris, right? It's one of my top five stocks for 2026. The premiums have been tough to trade, right? And you take a look, actually, it's chopped around since I think it was the middle of January. It had the investment from the U.S. government, $1 trillion on their drone business. They're going to spin it off. But I'm starting looking at, depending on where it opens, I think it's 370 here in the overnight session. 400 strikes might look interesting, right? Because if you think there's defense spending is going to go up, regardless of what's going on, probably is chopped around enough. And I think everyone's in story is kind of out there already. So now I think it might just be a nice trade for upside if the situation continues. Not only that, you have to think even when this ends, stockpiles have to get refilled, right? So LHX finally. So looking for calls possibly tomorrow. I'm not at the open, and I'm not saying not to buy things at the open, but if you tend to, especially on weekly strikes, the premiums get spiked right at the open. So more times than not, you can get a position uh, probably the same price, even if the stock has moved higher or lower, just because. And oil just went back over 110 here. All right, so that's LHX. Other names, right? CF Industries. I forget who was pointing back out in the chat room, but gosh, I remember playing the ag names back in the day, and a couple times we played maybe 2 years ago. The NTRs, the CFs, the Mosaic. But I mean, the straight has, I don't know, like 35% of the fertilizer shipments for the whole globe, and it's not that CF or NTR shipped through the strait, but because of the cutoff of supply, that'll allow them to raise prices. Raise prices mean higher margins. Higher margins, good for the company, good for the stock. So you already see CF is like 122 here, closing 115. I was looking on Friday, and the weekly strikes I think it was 117. I'm like and then it dipped and it went all the way down. I think it went back down to 112. Let's see, 117. It opened at 120, went down to 115, and closed at 115.78. So not saying I'm going to chase it at the open, and also the premiums are expensive, but I'm looking. I think it's the March 150s. Could be interesting, right? So if and this is another one that I don't even think it needs the situation to continue for this to might be a nice play regardless. So CF's always been a great name, cash cow. obviously coming into seasonality, right? It is up quite a bit since the start of the year. I mean, it's almost what 50% to the upside, but I don't think that'll matter. So, and if you've been around trading a while, I remember I don't know, it was 2007. There was a huge ag cycle. CF, Mosaic, they all went bonkers. Like they were up like 300%. These were the meme stocks of yesteryear, right? If you traded back then, these were the names. And they went bonkers, and then they kind of lose interest and lose luster, and then they go bonkers again. And here's another one of those cycles where maybe there's an opportunity at the open that it might. And these are the type of names that are fun that'll do well, even if this situation lingers, right, or doesn't linger, right? If things kind of resolve and the markets find footing, this might go up regardless if the markets tank or not, right? So those are the best type of plays to trade for in this market. All right, so that's the two names. One of the two names I'll be looking possibly for tomorrow. Obviously GLW. So I just pulled those up earlier. You look at the Korean market last week. Was it up down 12%? So it entered last week at all-time highs. It had a 12% dip. Then it rallied 8%, then another 4%. So then it was green on a week, and then it dipped at the end and now it's down like 7% overnight here. And the big story there is the energy names, right? Samsung, South Korea, that's their namesake, right? So GLW is 117 here. So finally, I might look to get back in GLW. That whole story hasn't changed much. Obviously, you have some folks tooting the horn that this Owl Capital and some of these other funds are not saying belly up, but some of these deals are not going through because of financing fiascos. I mean, if the market starts finding pressure, and then it'll become like one of those self-fulfilling prophecy situations where if yields start heading higher, deals cost more money, raising capital costs more money, stocks fall. So when stocks fall, you can't use your equity gets less capital if you want to raise cash. So it becomes this little snowball effect where these data centers, when you're doing a deal and Oracle's at $210 and now it's $150, you're losing $70 of equity price that they could have done a raise at a substantially less stock, right? They wouldn't have used less dilution. So it's all these different factors that you start, things get harder when the market starts to sell off. So then it kind of exposes things that would have been exposed. So hopefully we don't get into that scenario. But GLW, I wouldn't say finally attractive, but it's below the levels when I played my calls for some nice profits. Just need the premiums to come out of the calls, right? It's had a 13-14% implied move on monthly options, and the stock that's high for a regular stock. Not regular, like a momentum name. GLW is like one of those, I mean, take a look at its trading back in October, November. So that finally might be coming back to earth. So if we're in a setting where the next couple of weeks, this week we find footing and then the markets start to head back higher the following week, just be a name, it starts to head back to 160 and beyond. I still think it trades 248 plus in the coming months. So that's GLW. And then some other names. So Intuit's a great example of what could happen, right? And we've seen the software names. I mean, unless you've been living, and oil's hitting highs here, 114, SPY's at 658. And unless you've been living under a rock, obviously the software, the SaaS apocalypse, whatever you want to call it, all these names have been destroyed, taken to woodshed. Pretty much any chart you look at in that space had some kind of setup. And if you don't know, my pincher is one of my favorite plays. That's where the momentum indicators pinch together, and it's a pincher and typically precedes a large reversal to the upside. So there's two types of moves that I look at: the tight Bollinger Bands, which is a little different. I'll point one in a second, and the pincher. And take a look at Intuit. Of course, hindsight's 2020. But if you tried to trade Intuit calls at the bottom after its earnings, very substantial. Well, you'd have to hold on, right? Because the market's been a little rough on the software side. But take a look. These are the 250. So if you got those last week, and it's hard to see, you got them at 68 cents. The March 20s, they closed at 1050, and they're going to take it a little bit on the chin tomorrow because was it 476? But my point is, here's another one, and I hate to use Reddit because you probably hear me talk about Reddit, so I'm blue in the face. You probably get a little talk about it. But one of these days or times, it's going to have one of these moves where you're going to look back and the 200 or the 180 calls, which are 10, 15 cents, are going to be like $25. I don't want to be in a position where I'm looking back and kicking myself for missing a move. So you have the pincher. This is the tight Bollinger Band setup where you have tight Bollinger Bands. Typically, this means it's been a tug of war between the bulls and the bears. One of those sides typically wins and pulls them over that line, and then the stock goes bonkers, 15-20% at least. So you can see this August move is with earnings, so all the way from 160 to 250 in a matter of like I don't know if it was 3 weeks, somewhere in there. Not saying deja vu, but if you look, the setting's pretty similar. Just the difference is the market is not as calm as it was back in August, right? Gosh, I wish for those days. Everybody wants volatility until it happens, and everybody wants the old days back. But uh, who knows tomorrow? And I'm looking at Reddit right now. It is 133 by 135. It actually did well last week for a little bit and looked like, okay, this is the time it's going to break out. You know my thoughts on Reddit. I'm not going to go on and on about it. It's funny to see some of these negative names, right? The trade desk last week, you have their CEO, and I remember trading the trade desk on and off before it split is $1,000. Always a great story, but always trade at crazy multiples. And even now it's at $28, still trades like 20 times revenues, but it's a name, and all it needed was like a little kick in the butt, right? And Reddit already had an insider buy. I don't know what the kick in butt is. I mean, maybe it's finally a new licensing deal. It's funny, on Friday the new additions to the S&P 500 were announced, and Reddit actually meets all the requirements to be added, even though it's a recent IPO in 2024. So not saying that, it should have been added, would have been nice, but it would be nicer when I'm in the calls and that happens. That's just the risk you get. But again, so Reddit, I mean, I'm blue in the face talking about it, but I'm not saying I'm getting calls at the open tomorrow. But the other thing is, talking about Intuit, if you got the 500 strikes on the March 20s when it was 300 and whatever bucks, you're up, whatever that's not wait 60 was it 2,000% somewhere in there. So with Reddit, similar story. You start looking maybe the March 190s, right? So you go out to March 20, those like 30 cents. Maybe you go out further into the Aprils, and then when it starts to go, the hard part's to hold, right? Because it rallies 5% one day, you're not going to make the profits. The profits is holding as it goes from 170 to 190 to 210. So that's Reddit. Just other names. So even last week, trying to find some inexpensive put hedges. And ASML, I was looking last week, and even let's say on Friday, you want to go and say, we're going to have some crazy sell off. And ASML is one of the best fundamental stories out there. They buy back stock like every week. It's front and center of what's going on in the semi sector. If it was in the U.S., it's a monopoly, right? It's going to be regulated somehow, but it's not. So needless to say, it's always a name I look at because it's volatile. And then if you can find a strike and get in before the move, you can make lots of. Oil's at 114. Oil's gonna have to slow down here soon. ASML is, so I'm looking, and even if you want to get the 1,000 strikes for this week, they're expensive. I think they're $2, right? Did I pull those up? Of course I didn't pull them up. Why didn't? So they so if you want to do a decent put hedge, the 1,000 strikes at 230 by 430, right? The stock closed at 1292. So it doesn't have to have a $292 decline to make money on the put side. It could probably get down to 1,200 Monday for those to be a double triple. I would have to see what the implied move is $104 on the weekly strikes. So at 1292, I don't know what that math is, 8%. So anyway, in a nutshell, trying to find inexpensive put hedges is kind of like a losing endeavor. So I keep looking at JP Morgan and Visa. So Visa is the one that maybe has a little glimmer of hope, because if you look at the 285s and the stock closed at 320, no, closed at three. Yeah, they closed 317. It's only down 310, 313 right now. Bid ask. So the 290 is a 33 by 61. So maybe you can get in at 45.50. Well, could have on Friday. Who knows what those will open? But that's not pricing in any big move. So $11 implied move on the weekly strikes. It's at 317. So that's like a 3% move. So with that, you're going to get a premium bump on those put positions, even if it doesn't move much because of the market. So that kind of gives you an opportunity to win on the both sides, right? Because then if it starts to move, you get the double whammy. So that's that. Visa, ASML, SE Limited. So just other beaten up names that might have an opportunity for a bounce. And SE has been one of my favorite names. I think it was one of my top 5 stocks of 2023. That one's been beaten up. Its earnings last week were actually decent, but I think there was a slight miss on like guidance. And because of the environment we're in, it got destroyed, but I think maybe destroyed too much. And you see the bounce from, I think it reported Tuesday morning. I believe that's when it was. I think it was down 25%. And then it started to bounce for the rest of the week until Friday. But this is a name you look, and maybe it has a gap fill. And the gap's 104, I believe. So another name I'll be watching Monday morning. If there's some kind of footing in the market. That could be a bounce play for upside. And then, of course, the other names. And the good thing about this week, I don't have many positions on, right? And some ways to control risk is, uh, mitigating the risk you have on, right? And not going crazy. So, I got the Travel Zoo calls, which were looking great Friday morning. And some of the move they're saying on Thursday was because this Claude update didn't have the auto buy feature for vacations and travel. So you saw Expedia, Booking.com going bonkers on Thursday. Travel Zoo went as well. I think it was more. They announced a 1 million share buyback. But hey, that's me. It went all the way up to 735 on Friday and then gave it back, closed down 3%. Still like this one for upside. I keep saying it. I look at the stock and I see it as a $25 stock, just as it is with its current business cash position, its free cash flow, what it does on a quarter basis, its 1 million share buyback. It's $25. That's how I look at it. So thankfully, I can sit on my fingers and not grab too many more calls because otherwise, the markets tell me it's not. One of these days, I think it will be. So that's Travel Zoo. And then Serve reports Wednesday morning. So the funny thing with Serve Robotics is they always report after the close. And I wish I had time to get my Wayback Machine and show the earnings reports when they report in the after hour session, because the instant it comes out, and sometimes like not even a split second, the shorts come in and destroy the stock. And last quarter, the quarter before, it closed like $11 and they had it down to 820 in the after hour session on like minuscule volume. So it's almost like they're trying to instill the well, fear out the longs, I don't know, or just manipulate the stock for their profit, whatever it is. So now, the skeptical person in me says, oh, here's the company saying we're going to do earnings pre-market, because this is the first, every earnings they've done. And do I have the earnings? Of course I don't. No, I don't. Let's see if I can pull it up. Every earnings they have done has been after hours. So to me, I think it's because they want to change the story and be able to protect their stock and announce earnings in the morning. Let's see. Of course, I have, yeah. So after hours, after market close, every quarter since August 13th. We'll see what happens. Big quarter. The thing with Serve Robotics, and I'm a big bull. Same with Travel Zoo. I look at Serve Robotics and I see a substantially a stock that should be substantially higher valuation than it is now. Market says otherwise. But you have their loss their loss on a quarterly basis. So very easy to poke holes in early stage companies, because if you look at the story, and the good thing about their story is that their revenue year over year growth rate is going to be over 1,000%. So you got to balance that with hey, they're going to lose $30 million in cash this quarter as capex. I think that's how much they spend in regards to running the business. They'll also be able to talk about their new acquisition, which I can go on and on about it, in regards to moving into the hospital space with these robot assistants, which I think is a huge addressable market. You had the bear cave, and I don't like to talk about other folks in a negative way. That's just not my thing. I always premise that I always start with that and then do exactly that, talk bad about them. But this bear cave always comes out of all these names. Sometimes they're in names I'm in. He did it on the Joint, which, hey, there's other names too. Enovix batteries, EMVX. Uh, he came out with a long piece on that, because I can go in a long story about that reason, but I don't. That's not what I'm into the rant about. But he did come out on Serve Robotics. I haven't. I refuse to subscribe to his thing to read the whole piece, but some of it sounds like it's a hit piece in regards to the technology that the robots stole in the middle. There's a video of the robot getting stuck on train tracks. There's a video of another one getting stuck in a crosswalk. There's also a petition in Chicago for this community to outlaw robots on the sidewalks. And I'm like, what do you look for in a company, especially a company that's looking to scale and grow and to get into a sector? You look for a disruptor, right? And to me, what is that company that's disrupting? For someone to do a petition, it's like autonomous driving, right? Most people don't come on and say, oh, I want to have no one drive the car. When I look to the right at a stoplight, I want to see a human being in the car, and it freaks people out. Which I get it, right? But you don't get to disrupting sectors by doing things that everybody likes and loves, right? I always use the analogy too. I mean, back in the day, people, who would have thought you can buy a product with a plastic card? And to this day, you still have a lot of the older folks who, they just use cash. They refuse to use any kind of plastic. Gosh, digital, when they see you use your phone or something other than plastic now, and if you're like, how do they? And they still don't trust it, right? And I mean, I get there's trust things with media and stuff these days with the new generation. So, but to me, like that, just like if you want to say what is the definition of disrupting, having people write a petition because your robot is doing something that maybe inconveniences them a little because you have to move out of the way or whatever, like that's disrupting a second. I look at the other way. I mean, if you're in any of these metro areas, how many parks in New York City, you see this little, I don't even know if there's a name for them, this herd of bikes or delivery bikes. They just wait there until they get a call to do a delivery, and they're like almost like a nuisance in my but whatever. But I don't see people do maybe they do a petition for that. I don't know. But to me, that's disrupting a sector. So if you want to say serve is horrible because they're disruptive, I guess if that's the bear case. But anyway, rant over on that. My in the nutshell, I wouldn't be surprised it could be up 50% for the week. It could be down 50% on a week. And it could be on phenomenal numbers. So that's the frustrating thing about it. But still love the name. If there's weakness after earnings, I'll probably nibble some calls. And that's that. I'm trying to think of oil's still hitting highs here. 115.67. The SPY's down at 657. I should probably get off the week ahead rant here because the more I'm talking, the worse the market's doing. But that's kind of in a nutshell. Going to be selective after the open. Probably wait for the dust to settle for a couple minutes. LHX. So L3 Harris looks interesting. Fertilizer names, the CF, the NTR, probably CF. I think that'll be front and center. Then on the flip side, I mean, if I can get inexpensive put hedges on Visa, I might look to do that. 285s maybe, because if the proverbial shit hits the fan, those puts in names that normally don't fall, well, those names are going to just fall just as a function of everything else falling. So, and that's it, folks. Have a great evening. I'll be back. Rock and roll.